South Africa's state-owned logistics firm Transnet is looking for a partner to acquire and lease its rolling stock, and that move has been prompted by its poor financial situation. Now, Transnet, one of the largest rail operators in Africa, reported its worst performance in a decade last year. Here's CGTN Sumitra Naidu reporting.
Private companies, including mining giant Anglo American, say they've lost billions of dollars in potential export revenue due to Transnet's poor performance. They're calling for more private participation.
With Transnet being a state-owned company, there was not pressure on them to constantly renew themselves. And also, if you look at the 9 ports or the 8 ports in the commercial cargo, it's belonging to one owner, and which is Transnet. So there's not interport and intraport competition, so there's not pressure to reinvent themselves.
According to the African Rail Industry Association, Transnet underspent on track maintenance by at least $1.5 billion in the last 10 years, and its operational performance has decreased significantly over the past 5 years, down from 226 million tons in 2018 to 173 tons in March 2022.
There was a tender for sales of slots, and the requirements firstly were flawed in order to sign a non-disclosure agreement, and then two, they did not want to have diesel locomotives, they wanted to have electric locomotive. It takes at least 24 months to manufacture a locomotive, and depending on the specs. So it may have been done intentionally to exclude anyone that wants to participate in third-party access.
Third-party access to South Africa's freight rail infrastructure is part of Operation Vulindlela, a flagship program of economic reforms designed to unlock private sector investment. Transnet announced last year that 16 slots would be open for auction. At the end of November, there was only one bidder.
We need to make sure that the rail policy get now the implementation legs, and I think that's where we need to work hard with government to make sure that it's a palatable implemented plan that can help us to get the rightful demonstrated capacity for trade growth.
Transnet inefficiencies and frequent strike action is costing the South African economy billions of dollars in lost revenue. The Minerals Council estimates that to be in the region of $44 million per day. The plan to lease of some routes, corridors and rolling stock could be beneficial to both Transnet and the economy as a whole, but it does need to happen urgently. Sumitra Naidu, CGTN, Johannesburg, South Africa.